Good evening, friends. In the series of webinar which we have started on GST, this is the third one whereby we shall be able to go through the basic concepts of registration, returns and payments. The Chamber, as a part of endeavor of dissemination of knowledge, has been continuously holding various programs and trying out to reach far off members to achieve this target of knowledge assimilation, and requesting all of you to please become member of the chamber so that such future programs can benefit you in your profession and we can all grow together. Now basically GST as a synonym also means growing and sharing together, and as a part of this endeavor we shall be now presenting to you Mr. Ashit Shah to give you a brief background of his achievements, professional achievements. Ashit Shah is a partner of Shah and Savla, a chartered accountant of repute, a very known faculty at various organizations, just as, of course, he has been a past chairman of the Indirect Tax Committee of the Chamber of Tax Consultants. He has also been a speaker at BCAS, at WRC, and at All India Federation of Tax Practitioners and various other associations, apart from the CPE study circles where he has been a regular. He has written various papers, he had chaired various sessions, and he has also written lots of paper, won awards for best paper writers, best group leader. He has also been a member of the managing committee of the Sale Tax Practitioners Association, and he has achieved various other achievements with respect to the professional work. Going ahead and improving upon our future, past webinars, this time at the end of the webinar, we will be reserving 5 to 10 minutes for question. You should be putting up your questions on the chat box, and then whoever's question is taken, they will be allowed to speak, and so the speaker will be able to hear you also, and the speaker will then reply to the question raised by you. So this will be an added feature in today's webinar. One more information which I would like to give you is that those who become members of the chamber will be regularly getting a chamber's journal, which is a very high quality journal with respect to various laws pertaining to direct as well as indirect taxes, including company law, Ind AS, and various other features covering various articles on various topics. And therefore, before I leave the place for our today's speaker, I would request all of you to become members of the chamber. Looking forward to be with you and hearing Ashit's lecture. I would now invite Ashit to start his talk. But before that, I would request the president who is here across right with me to hand over a memento as a mark of our love and respect towards him. So the president will hand over the memento to Ashit.
Good evening to all of you. I guess I'm audible. Wherever you have a problem of not audible, so please type it and put in the chat box so that we can take care about the thing. Friends, first of all, I would like to thank Chamber for providing me an opportunity to share my views on the today's topic of procedural aspect in the GST. During this my session, I will cover up the matters relating to registration, payment of tax, and how to file the return or how many returns to be filed. Slide. Yeah. So coming to the first thing, when we are talking about registration, so first question which comes up in our mind that who is required to be registered. So the law provides that every person who is liable to be registered under Schedule 5 of the GST shall apply for registration in every such state in which he is liable to pay tax. So the question here above is that one has to see that what is provided under Schedule 5, that who are the persons who are liable to be registered, and then we have to see that whether they are exceeding the turnover limit or not. So let's now go to chapter 5 of the Schedule 5 of the GST Act, what it says. The Schedule 5 is divided into two parts. It says the turnover based criteria and non turnover based criteria. First of all, we see which are the persons or entities which would be covered under turnover based criteria. First and very important is that the person who are already registered and hold license under an earlier law. So what I mean earlier law, that means at present, if the SSC is registered under central excise, under service tax, under VAT, then these are considered to be an existing SSC. This SSCs or a person is mandatorily required to be registered in the GST regime. Now the question will that whether the turnover limit of 20 lakhs would be available to them or not, the threshold limit exemption. Yes, definitely they would be get the threshold limit exemption of 20 lakhs, but provisionally they have to make them registered. In many of the states, the state government has said that the provisional assessment number ID has to be obtained mandatorily by all the taxpayers under the particular regime. So they have to take the provisional number, and if they feel that yes, I wanted to be in the GST, then they can take a final registration. We will come to that migration process in a little after some period of time. Let's first stick to the who are the persons who would be covered under the registration. Second category is the turnover based criteria in respect of the aggregate turnover in a financial year exceeds 20 lakhs rupees. So if a dealer or a person whose turnover in a state exceeds 20 lakhs rupees, then he needs to be registered. But here the word is the aggregate turnover. So we have to understand the meaning of aggregate turnover, what it tries to say. Let's go to the aggregate turnover definition. It says aggregate turnover to have to be computed on an all India level basis. That means, for example, if a company or an is having a multi-state locational company who is having their offices in 10 states, then turnover of all the 10 states needs to be considered. And if that turnover happens to be a more than 20 lakhs rupees, then he is required to be registered under the GST. Now, having said that, now we have to understand what kind of turnover would include. So the law provides that it will include all taxable supplies, all exempt supplies, all interstate supplies, and export of goods or services. That means on the revenue side, whatever is their revenue stream, that all has to be taken into consideration, except those which are not covered within the GST regime. That means the petroleum, if there is a sale of petroleum product, then that entity would not be, item wouldn't be covered under the aggregate turnover. Then let us understand which are the items which has to be excluded. The law provides that any tax which has been levied under the GST, namely the CGST, SGST and IGST, that has to be excluded from the turnover criteria. That means naturally the canons of taxation says that any taxes should not be part of the turnover. So that all the taxes needs to be excluded while determining the turnover limit of rupees 20 lakhs. Further, it says that supplies on which tax is charged under the reverse charge mechanism. Friends, you know that in respect of certain categories of items, the government has taken the power that in respect of certain category of goods or certain category class of person, the tax needs to be discharged by the person who receives the services or who receives the goods. This is in contrast to the normal provision that a person normal provision is that the person who sells the goods or provides the services, he has to charge the service tax. But in respect of reverse charge mechanism, the person who receives the goods or who receives the services, he has to discharge the tax liability, and therefore that turnover also needs to be excluded from the aggregate turnover. Next is the value of inward supply. What do you mean inward supply? It means whatever purchases you are doing, purchases of goods and services, that should also not taken into consideration. Friends, here the marked difference over here which you can see is that here the word aggregate turnover is there, and turnover includes sales as well as purchases, and that's why they are saying that the value of inward supplies, that means the purchases, has to be excluded from the total while determining the turnover limit of 20 lakhs rupees. So the next question which will come out, that what will happen to the other duties and taxes which has to be levied, because all the duties and taxes are not subsumed in the GST. So the law provides that if there is a levy of basic custom duty while you are importing the goods, or when you pay the stamp duty or security transaction tax, etc. Whenever these are levied, this all has to be included in the value of supplies. That means that the one has to include it in the aggregate turnover. That means one has to be very much careful while determining the turnover limit. Now this turnover, as I have said, that has to be calculated on a on all India level basis. So now let's take an example that a company which is having a place of business in 10 states, and in each state the turnover is happens to be a 2 lakhs rupees. And in the 11th stage, the turnover, once the turnover is more than one rupee turnover, then he is liable to be registered under the GST in all the states, 10 states. That means the law says that if the total turnover on all India level basis is more than 20 lakhs rupees, one has to apply for the registration. Therefore, we have to be very much careful for those SSCs or a person who is having a multi-locational based company, because the turnover limit has to be taken into consideration in that manner. Having understood the aggregate turnover limit, now, sir, one another provision has been made in respect of states which are located in the eastern region of our India. That is Arunachal Pradesh, Assam, Meghalaya, Manipur, Mizoram, Nagaland and Tripura. If a person is carrying out supply from this eastern states of India, that means those who are specified under Article 279A4G, they are liable to be registered if the turnover exceeds 10 lakhs rupees. That means the turnover limit has been considered to be a 10 lakhs rupees. So one has to, if they are located in those states, then the turnover limit is different turnover. Next, a person who is under the turnover based criteria is a taxable person who is having a multiple business verticals in a state, which may obtain a separate registration for each business vertical. Now it may so happen that in the state of Maharashtra, a person is or a company is having two businesses. One is say in the state in the city of Mumbai, one factory, and another factory is in the state of Pune, in the city of Pune. Now the question is whether that SSC is required to obtain two registration or only one single registration. The law provides that SSC is having an option. Either he can register only one single premises, either Mumbai or Pune in my given example, or if he's if that both the place of business in Mumbai as well as Pune are considered, if they are a separate business vertical, then in that case they have an option to register both the premises. So the question arises, what do you mean by the business verticals? Fortunately, the law has defined what do you mean by the business vertical. Let's see the meaning of the business verticals. Business verticals means distinguishable component of an enterprise that is engaged in supplying an individual product or a service or a group of related product or services, and that is subject to risk and return that are different from those of other business verticals. Explanation: factor that should be considered: the nature of the product or services, the nature of production processes, the type or class of customer for that product or services, the method used to distribute the product or provide the services, and if applicable, the nature of the regulatory environment. So basically what it tries to say, that if there is a different profit center for Mumbai and Pune, and then only they are considered to be a business vertical, and they have an option to register to take the separate registration. Otherwise, they can have a single registration. Now, these are the persons who is required to be registered under a turnover-based criteria. Now, let's come to the persons wherein they are, who are the persons who are covered under the non-turnover-based criteria. First is the person making interstate supply. So what do you mean by interstate supply means? Interstate supply means the location of the supplier is in one state and place of supply is in another state. Since the place location of the supplier and place of supply is in different state, it is considered to be an interstate supply. Then in that respect, irrespective of the turnover, they have to register from under the GST. Second category is the person required to discharge tax liability under reverse charge mechanism. At present, those under the service tax law, this is also applicable, that person, if he is required to discharge his tax liability under reverse charge mechanism, he has to register irrespective of the threshold limit of exemption, that is from 1 rupee he has to register with the authority. Next is the casual taxable person and non-resident taxable person. So we need to understand the meaning of casual taxable person and non-resident taxable. Friends, I will come in a couple of minutes in respect of a casual taxable person and non-resident taxable person. Next is the person who have to deduct tax under section 37. That means if a supply is to be made to a government department or a local authority, etc., then the law provides that the government or a department has to deduct the TDS from the supplier's payment at the rate specified. So even those persons have to be registered irrespective of that turnover criteria. Next is the electronic commerce operator for specified categories of supplies. That means the law has provided that in respect of certain categories of supply, instead of the supplier to the electronic commerce operator will pay the tax, under this also reverse charge mechanism has been applicable, and electronic commerce operator will discharge the tax liability, and therefore he has to be registered irrespective of that turnover limit. Next is the brokers and agents who supplies goods on behalf of the other person. So now brokers and agents also needs to be registered with the under the GST. In the existing law, these brokers or agents need not have to be registered under the law, because they are getting only the remuneration by way of a commission. But now under the GST law, all brokers and agents have to be registered, and the transaction would be a pass-through transaction. That means the principal will transfer the goods to agent. At that point of time, he has to levy the tax. When broker sells it to the another person, at that time he has to levy the tax, and broker will get the input tax credit of the principal. So this is how the whole transaction. So now the total business conditions and transactions would be now again have to be restructured in a proper manner. Next is the input service distributor. Input service distributor is a person who just distribute the credit from one of his branch and distribute the credit to the another branch. Even the input service distributor, there is no turnover based criteria. Next is the person who supplies through electronic commerce operator. So that means the person who supplies to the electronic commerce operator, even they have to register from 1 rupee. No threshold limit exemption has been provided. Next is the electronic commerce operator himself, even because they have to be registered without any turnover based criteria.
Next is the supplying online information and database access or retrieval services. Friends, this is the services which is at present under the service tax law that has been taxable from first day of December 2016, and immediately when the draft law in the November 2016 has come, they have also said that this online information and database access or retrieval services would be covered, and the service tax needs to be paid. Tax needs to be paid under reverse charge mechanism, and therefore they would be put in the non-turnover based criteria. And last one is the voluntary registrant. That means if any SSE or a person feels that irrespective of the turnover limit, if I wanted to be under a GST, then he can register as under a voluntary registration. Then last one is any other person or class of person is notified by the central government. That means central government has taken the power that after this 12 category of services, if any other person left out and they wanted to cover within the non-turnover based criteria, they can put that SSE under that head. Then what it says that while determining the total aggregate turnover, it says that the taxable supply will include supply carried out on own account as well as made on behalf of all principals. So this is applicable to the agents and brokers who supplies the goods of his principal. So that means if an agent or a broker is there, if he is selling the goods or supplying the goods of the 10 principal, then while determining the aggregate turnover, he has to take into consideration the supply from all the 10 principals and then determine whether it exceeds 20 lakhs or not. And if it happens to be a 20 lakhs rupees, then also he will not be able to get, because from 1 rupee he has to be registered. Supply of goods by principal to job worker for completing job work will not be considered in aggregate turnover of the job worker. Naturally, whenever a principal supplies the goods to the job worker for carrying out any process or for completing the job, at that point of time it won't be considered as a transfer, and therefore it won't be considered within the definition of the aggregate turnover of the job worker. So that turnover will not be counted in the turnover of the job worker. Then next is the person who transfers his business, whether on account of succession or otherwise, to any other person as a going concern. Then the transferee or the successor shall be liable to be registered with effect from the date of such transfer or succession. That means if a business has been succeeded from, say, this 20th December, then from that date onward, the successor has to register before the GST authority. Then next is in respect of a transfer pursuant to the scheme of a scheme or an arrangement for amalgamation between two companies by an order of High Court. Then in that respect, the transferee shall be liable to be registered, where he is with effect from the date on which registrar of company issues a certificate of incorporation giving the effect of the order of the High Court. So from the date of his registration with the GST authority would be the date of the certificate issued by the Companies Act, that means Ministry of Corporate Affairs. From that day onwards, he is just required to be registered. So having understood that every person who are the persons who are liable to be registered under Schedule 5 under the GST, they have to apply in the every state in which he is liable to pay tax. So once it has been determined that my total turnover is more than 20 lakhs rupees, then what is to be done next? One has to apply for the registration in form number GST REG1 within 30 days from the date on which person becomes liable to be registration. That means if suppose on 20th of December 2016, if my turnover exceeds 20 lakhs rupees, if I am following under the turnover based criteria, then within 30 days I have to apply for the registration in form number REG01. Now before making the application, the taxable person have to furnish his PAN. That means he must be having PAN issued by the income tax department. He must be having a mobile number and he must be having an email address. Now why these three things are required? These three things are required because now the number which has been issued by the GST is a PAN linked number. So without PAN the number cannot be issued, and nowadays that is a mandatory requirement in each and every law, whether it's a central excise, whether it's a VAT, or whether it's a service tax. Next is the mobile number and email ID and email address. Why it is required? It is required so that whenever you are giving the mobile number and email address, a one-time password would be sent to the SSE. On the basis of that one-time password, they can ensure that this is the person who is having this mobile number and email ID, so that in future, whenever they wanted to correspond to that person, they can very well correspond with them. At present, lot many dealers are there who are scrupulous dealers are there. They are just escaping from the tax by issuing the fake invoices. They are escaping the tax liability, and it becomes very difficult to the government to catch hold of that person. And hence, such kind of, it appears that such kind of provision has been made so that at least some precautions can be taken out. However, this furnishing of PAN, mobile number and email address is not required if a person is a non-resident person or a person who is required to deduct TDS or TCS. That means for this purpose, this person, they need not require this thing, because non-resident person, he may not have a PAN also. When in the person who is required to deduct TDS or TCS, they need not have to, they have to just deduct the TDS or TCS, nothing else. That's why this requirement has been done away with it. Some problem is there. Hello. Something is coming. Message is coming. The webinar will end in 5 minutes. Nothing, no? Okay. Yeah. Now, having understand who are the persons who is required to get registration, next is the who are the person who is not required to be get registration, because that also we must know that who is not required to register. So let's see that who are the persons who is not required to get registration. Any person engaged exclusively in the business of supplying goods or services that are not liable to be taxed or are wholly exempt from tax. That means they are not fitted into the definition of supply of goods or services, or so that they are out of the GST net, or they are not liable to tax because they are not covered within the definition of goods or services, or are wholly exempt from tax. Then those SSEs or persons are not required to be registration. So what do you mean by the exempt supply? That has been defined, and it says exempt supply means non-taxable, not taxable, nil rate of tax, or a totally exempt under section 11. So if a not taxable person or wholly exempt from tax, then they need not have to require for registration. Second class of person would be an agriculturist for the purpose of agriculture. So one needs to understand who is agriculturist. It has been defined in section 2 subsection 8. It says agriculture means a person who cultivates land personally for the purpose of agriculture. And agriculture means it includes floriculture, horticulture, sericulture, the raising of crops, grass or garden produce, and also grazing, but does not include dairy farming, poultry farming, stock breeding, the mere cutting of wood or grass, gathering of food, raising of man-made forest, or rearing of seedling or plants. So if an agriculturist is there and who is doing it for the agriculture, then in that respect he need not have to register under the act. So that means all the persons other than these two have to mandatorily required for the registration under GST, either if their turnover exceeds 20 lakhs rupees or otherwise. Now what will happen? When once now we have prepared the application, so application, as I have told you, that has to be in form number REG1. That REG1 is 7 pages to be filled and 4 pages of instructions are there. So it is advisable that this instructions has to be read properly, and this form has to be electronically filed along with specified documents to the common portal of the GSTN. That means this all the applications has to be filed electronically. Same procedure is there in the existing law also. Whenever you are getting registered under the existing VAT law or service tax law, all the applications for registrations are made electronically. Along with the application, one has to also submit the specified documents, scanned copy of the documents, namely the constitution of the business, details of principal place of business, details of bank account, details of authorized signatory and photograph, which would have to be uploaded along with the application of registration. So all this application of registration along with the scanned documents needs to be scanned it and uploaded before the GSTN network. Once an application for registration is uploaded, immediately an acknowledgement shall be given electronically in form number GST REG02. Naturally, whenever we are accustomed and used to the acknowledgement that whether whatever we have submitted, that there has to be some proof, and that's why the acknowledgement is coming in the form of REG02. Then the next step would be, what would be the next step? That yes, whatever the application we have submitted before the GSTN, proper officer will verify that whether the application which has been uploaded along with scanned copy of documents is in accordance with the law. That means whatever documents they want, they are in that manner. So the proper officer will verify all the documents which has been enclosed with it. Now here, please mind it, the term proper officer. Now we have to use to this term. Previously we were aware about the assessing officer or a VAT officer, but now we have to understand, change the terminology. It's a proper officer. So proper officer will do the verification. If there is any deficiency in the application, then he will intimate electronically in form REG3. That means if any document is not attached or scanned copy of the document is not proper, then in that respect he will prepare an efficiency memo, and that he will has to intimate electronically in form REG03 within 3 common working days from the date of submission of application of registration. Now here, within 3 common working days, what is the logic of 3 common working days over here? We understand that yes, it should be a working day, but why common working day? It appears that the reason for common working days, because this law is a common law for all the states of India. They have to incorporate this law. That means, and in all the states we have different holidays. Like say for example, in the state of Maharashtra on 1st May it is closed, but it may not be so in the state of West Bengal, or it may not be so in the state of Delhi. Then in that respect it has been said that within 3 common working days that state has to take an action and send the deficiency memo to the taxable person. So that deficiency memo has to be sent by the proper officer. Once that deficiency memo has been received, then what the taxpayer needs to do? Then he has to, the applicant has to now have to submit the clarification or information or document, whichever has been mentioned in the deficient memo. He has to submit it again electronically in form REG04 within 7 days, 7 common working days from the date of receipt of intimation, because that deficiency needs to be rectified. Otherwise, his application of registration would be rejected. So the verification of the application will be made. Now, once you have uploaded the verified documents as per the deficiency memo, now the proper officer will again scrutinize the thing, and if he feels that, or if he is not satisfied with the clarification or information or document furnished by the applicant, then he will reject such application and inform the applicant electronically in form REG05. Now, while doing so, officer has to give reasons in writing for such rejection of the application. That means one has to be very careful while uploading the documents as per the deficiency memo, because if once the application is rejected, then again you have to make a fresh application. Further, it has been said that if the application of registration is rejected, it shall be deemed to be a rejection of application for registration under SGST and CGST Act. Now, when this provision has been made, I was going through section 19 subsection 10. It says if we will reject the registration certificate under SGST and CGST. So this gives an apprehension that whether I have to make 2 applications, one under of registration, one under the SGST Act and another under the CGST Act. The obvious reply is no. The application for registration is one, both for the SGST and CGST Act. But only it says that since there are 2 authorities are there. Therefore, one application, if it has been rejected, then SSE cannot take a stand that since you have rejected, but the CGST, under the CGST Act, it has not been rejected. Therefore, I am registered over there. And that is the reason why it has been said that once the application is rejected under the one law, it would be rejected under both the laws. Similarly, if the application is accepted, then the registration would be under both the laws, as GST Act and as well as the CGST Act. Now, what will happen if the proper officer doesn't take any action? In India, it's possible that he may not take any action. Then it says that if the proper officer fails to take any action within 3 common working days from the date of submission of the application, that means we know that within 30 days we have to make an application, then within 3 days he has to reply whether is there any deficiency in the application for registration or not, or within 7 common working days from the date of receipt of clarification, information or documents furnished by the applicant, then in that respect, the application for the grant of registration shall be deemed to have been approved. That means then we need not have to wait that whether I am registered or not. So if within 3 days nothing has been done, I am deemed to be registered, or within 7 days from the communication of the deficiency memo, then in that respect I am deemed to be a registered. But the obvious question will come out that without the registration certificate in hand, how do a SSE will take place? Friends, you need not have to worry about it for the physical registration certificate, because in that portal your registration certificate would be available online and you can take as many as copies of the certificate of registration. So one need not have that. The physical hard copy of the registration certificate would come at your place. This is in the same line in which the SSEs of service tax are there. At present, whenever you are making an application for registration under the service tax law is there, you can get your registration certificate will be coming online, unlike in the VAT laws. In the VAT laws, certificate of registration has to be issued separately. So this is the marked difference between the existing law and the proposed law of the GST. Now, once the registration is been there, then what is the next step? The issuance of certificate of registration. So, on examination of the application and accompanying documents, the proper officer will grant the certificate of registration within 7 common working days in form number GST REG6 for the principal place of business and for every additional place of business from the date of submission of the application. That means your final registration certificate will come in form number GST REG6, and which will contain the principal place of business and every additional place of business from the date of submission of the application. So many questions has come out that what will happen if in the same state of Maharashtra a person is having 4 offices and he doesn't want it to go under the business separate vertical, then how he has to apply for registration? Then in that case, the person has an option. First of all, he has to choose which place of business he wanted to consider it to be a principal place of business, and that place would be considered as a final place, and all other 3 places would be considered as an additional place of business, and that detail needs to be given while applying for the registration. This registration certificate would be effective from the date of which person becomes liable for registration if the application is submitted within 30 days or from the date of application. That means if the application is made within 30 days of the liability, then that date would be taken into consideration. But if there is a delay in applying for the registration, then date of application would be considered as the effective date of registration. Friends, under the existing law of VAT, the effective date of registration is coming in the certificate of registration, but in the service tax law, such kind of effective date of registration is not coming in the certificate of registration. So this is again a difference between the existing law and the proposed law or proposed GST law. Now this effective date of registration is very much important to take into consideration, because input tax credit is eligible only to those SSEs who are a registered taxable person, and it is not available to an unregistered taxable person, and that's why this effective date of registration is very important. Now, we have been issued a certificate of registration. So naturally, the certificate of registration will contain my goods and service tax payers identification number. That number is called as a goods and service tax payers identification number, GSTIN. This number consists of a 15-digit number is there. You can see it on the side. That first 2 digit would be a state code. The next 10 digit would be a PAN which has been issued by the income tax department. 13 digit is the entity code. 14 digit is a blank code which would be used at a later date of time if they wanted to capture any information. And 15 digit is a check digit code. So suppose if you are registered in the state of Maharashtra, then the state code would be 27 would be there. Then it would be followed by your PAN. Then 13th digit is the entity code. That means in one state, in state of Maharashtra, how many place has been registered. That means in the state of Maharashtra, if one place is registered, another place is registered in the state of Delhi, and then third one is in the state of West Bengal, then entity code would be 3. So that from that PAN GSTN number, one can able to check it out that this person is having a 3 of his place of business in all over India. The 13 digit would be an alphanumeric digit and would be assigned depending on the number of registration a legal entity has within one state that we have already discussed. So that means this way 35 business verticals of the same legal entity can be registered within a state. Now the physical verification. Now once the certificate of registration has been issued, and now the proper officer feels that I have to visit the physical verification of the place of business, then in that respect, he will visit the place of business which has been mentioned as a principal place of business of that SSE and verify whether the whatever details and particulars which has been submitted is proper or not. This is in VAT law, it is known as an advisory visit. Many of you, those who are practicing VAT, must be knowing that this advisory visit takes place after the issuance of the certificate of registration. This is more or less important for the very sensitive items like in the state of Maharashtra. In respect of a dealer who is dealing in iron and steel, such advisory visit is must, and officer always visits to such place because so many malpractices are going on. So this is and similar kind of provisions are also there in the GST law also about the physical verification, and that officer needs to give the report in form number GST REG 26 on the day following the date of such verification, and that will be kept on the record. Now we will come to the registration of a casual and non-resident person. So first of all, we have to understand the meaning of casual and non-resident taxable person. So let's try to see who is a casual taxable person and who is a non-resident taxable person. Casual taxable person means a person who occasionally undertake transactions involving supply of goods or services in the course or furtherance of business, whether as principal, agent, or in any other capacity in a taxable territory where he doesn't have his fixed place of business. So that means a casual taxable person, say a person who a dealer is in the state of Maharashtra and he wanted to exhibit his product in the state of Gujarat. So that he has decided that I will participate in the one of the business exhibition which is organized by the Gujarat Commerce in the state of Gujarat, and therefore he has taken his goods to exhibit in the state of Gujarat, and if any sales order takes place, then he will supply the goods over there. Then in that case, this example, that person who is in the state of Maharashtra, he doesn't have the fixed place of business in the state of Gujarat, and therefore while he is going to the state of Gujarat, he will be considered to be a casual taxable person, and he has to obtain the registration number by taking into consideration the turnover criteria which we have seen earlier. Now here the important thing that casual taxable person has to supply the goods or services in the course or furtherance of business. Then and then only it is said to be a casual taxable person. Now let's see the definition of non-resident taxable person. What it says, non-resident taxable person means a taxable person who occasionally undertakes transaction involving supply of goods or services, whether as a principal or agent or in any other capacity, but who has no fixed place of business in India. That means this talks about a person who comes from abroad, that means outside India, and do some supply transaction in the in India. Then in that respect, he is considered to be a non-resident taxable person. So let us try to understand what is the difference between two. First, apparent difference is that casual taxable person is in India and supplying the goods or services in India. In respect of a non-resident taxable person, this person is from outside India and supplying the goods and or services in India. In respect of casual taxable person, he doesn't have fixed place of business in India, business in that particular state. In respect of a non-resident taxable person, he doesn't have fixed place of business in India. And now very important distinction is that in respect of a casual taxable person, he has to supply the goods or services in the course or furtherance of business. Such kind of condition is not there in respect of non-resident taxable person. So now let us understand how it will affect. Say for example, I am going to Gujarat for some professional assignment. While going to Gujarat, I have one of my friend in Gujarat, and to whom I had an occasion to meet during my meeting. During that meeting, he liked my mobile phone, which I have purchased just couple of days back, iPhone 7 from Mumbai. And he has said that I like this phone very much and this version is not available in the state of Gujarat, so you please give it to me. I said not an issue because you are very good, dear and near friend of mine, so you can have my iPhone 7. But he says that no, I will take it only if you take the money from me. Otherwise, I will not take it. And I thought that is a fair proposition as this iPhone 7 is also a very costly phone. So I said, okay, you give me mother 60,000 rupees, which I have paid it for iPhone 7. And the transaction has been completed. Now, in this transaction, this comes within the definition of supply. Yes, there is a supply. There is a consideration attached to it. Yes, there is a consideration attached to it. Correct. But whether this service goods has been supplied in the course or furtherance of business, obvious reply is no. There is no this sale of mobile phone was not in the course or furtherance of business, and according to me, it appears that that won't be considered as a casual taxable person. Let us extend the same example in respect of a non-resident taxable person. What will happen? Now let's take a reverse case. One of my friend from US, he has come to India and he has bought an iPhone 7 and he has come to meet me in India. And I like that phone very much and therefore I have paid him 60,000 rupees and bought the iPhone 7. Now in this situation, that non-resident taxable person has supplied the goods or services to me. There is a consideration attached to it, but and there is no condition for that person should supply the goods in the course or furtherance of business. That means that 60,000 rupees would be considered to be a taxable supply, since in respect of non-resident taxable person there is no threshold limit exemption. So according to me, it appears that one has to be very much careful. He would be he has to required to be registered under the GST law. I think that should not be a idea of the lawmaker that even such kind of transaction would be covered, but apparently from this definition it appears that such kind of transaction would be would be taxable under the GST law. So now having understand the meaning of casual and non-resident person, now let's see how they are to be registered. It says that the casual and non-resident taxable person, they have to also apply for registration without availing threshold limit exemption, and that application has to be made in form number REG 10 at least 5 days prior to the commencement of the business. That means in my earlier example, if I wanted to do a business from the state in the state of Gujarat by exhibiting my product in the state of Gujarat, then before 5 days of the exhibition, I have to go before the authority, GST authorities in the state of Gujarat and apply for registration. Now what they are further saying that at the time of making application registration application, that person is also required to make an advance deposit of tax in an amount equivalent to the estimated tax liability. That means they are saying that we want your tax in advance. Why? Because they don't have the address proof that in case if I have escaped from the Gujarat, then where they will catch hold to me. And that's why this position has been that they want an advance deposit of tax. Now the problem will come out that how do you determine your advance deposit tax? Because I am first of all going to exhibit my product over there, I am also not aware how much sales or supply would taken place. But the law says you have to make an advance deposit of tax of your estimated tax liability. So based on my past experience, I have to estimated my tax liability and at the time of making an application for registration. Then further it has been provided that this certificate of registration would be valid for a 90 days from the effective date of registration. That means certificate of registration would be given only for the period of 90 days. If the 90 days has been passed away, then further then that person has to again go before the GST authority that you please extend the my period, and they would extend the period for a further period of 90 days on submission of an application in form number REG 25. Needless to say, again this application has to be made electronically. That means casual and non-resident person can get the registration for the certificate only for the 90 days. If they wanted to extend this time limit of 90 days, then they have to again make an application and then can take the number. But the law is silent that what will happen if they were again wanted an extension, but it appears that there is no such provision. Within 180 days, they have to wind it up, or otherwise they have to go for a regular registration under that state. Now, next kind of registration is suo motu registration. So, what kind of registration it is? Now, it may so happen that during the course of any survey, inspection, search or inquiry under the Act, if proper officer is of the view that a person who is liable for registration and such person has failed to apply for registration, then what the proper officer will do? He will ask that person to register such person and issue him a temporary registration number in form number REG 13. So the question may arise, why there is a need for temporary registration? He can very well issue the permanent registration because within 3 days or 7 days his registration certificate is granted. But no, here the catch is, whenever there is an inspection or survey, the officer will not believe the SSE or a taxpayer, because they know that this is a scrupulous person. There is no guarantee that once they go to their office, this person will go away. And that's why they say that we will give you the temporary registration. Now, why this temporary registration? Because while giving the temporary registration, they will immediately ask for the advance amount of tax, which is they have estimated while going through their records. And that registration, that money, they have to deposit it into the bank account. Now, when we come to the payment slide, at that time we will understand that why this advance payment is required, because unless and until that registration number is there, you cannot make the challan, because challan would be generated from the GSTN network only. That is the reason why they are issuing the temporary registration number, so that they can make the payment of tax. Then further, this registration would be effective from the date of order of the registration. That means if this today they have been given temporary registration, then that order would be considered as a effective date of registration. And however, such a person, SSE, who has been issued such order, they have a right to file an appeal petition against the order of grant of temporary registration. They have a right to file an appeal petition and say that this proper officer has wrongly issued him the order. Then what is the next thing? That suppose a person doesn't file an appeal and he accepts that yes, I have made a default in registering with the authority, then in that case he has to again apply for the registration within 30 days from the date of grant of temporary registration. That means he has to now take a final registration. At the time of taking the registration, he has to again fill the application from REG 0, REG 1. He has to also attach all the documents which are required at that point of time, and then submit the application. At the time of and the registration and after submitting the documents, he would be issued the registration certificate. This new registration certificate would be effective from the date of the order of registration. That means from the retrospective date. Further, it says that before issuing the certificate, verification would be carried out in the usual manner as provided in the rule. That means that verification of all the documents needs to be made by the proper officer, and if they feel that yes, physical verification also needs to be carried out, then he will do the physical verification of the place of business of that SSE. So this is known as a suo motu registration from the end of the GST authority. Now next is the migration of the person registered under the earlier law. So I am sure many of us are nowadays are following this procedure in the state of Maharashtra. The date has been expired from and the last date was the 7th December, and but now still that process is going on. So now what is there in the migration of the person registered under the earlier law? Let's see that. Now, as I have told you in the beginning, that every person who is registered under an earlier law, that means under the central excise law or a service tax or a VAT authorities, and having a PAN, they will be granted a provisional registration in form number REG 24, incorporating the goods and service tax identification number. So, first of all, they will be given temporary registration number. This certificate of temporary registration would be valid for a period of 6 months from the date of its issue. Then every person who has been granted provisional registration shall submit an application electronically in form number REG 20 within a period of 6 months. That means, now the question is, while this 6-month period has been provided, this 6-month period has been provided so that within that 6 months, taxpayer needs to decide whether I should go for the registration under the GST or not. Now, why they are thinking like that? Because it may so happen that the goods or services which they are supplying may not be taxable goods or services, or whatever the goods or services which they are supplying may not be taxable, or their turnover limit might be less than 20 lakhs rupees. Then in these three situations, he may opt not to register under the GST, and therefore he may not file the form, and therefore this 6 months period has been provided. So that means, first of all, temporary registration would be given to all the existing taxpayers. Then within 6 months of period of time, so say for example from 1st of April 2007 GST comes, so from 1st April, so on 1st April 2017 a provisional registration number would be given. At present provisional ID has been issued on the basis of information supplied in the GSTN network that all of you are must have. I'm sure all of you must have taken this temporary registration number. Then from the 6 months from the date of implementation of the GST, that means from 1st April 2017, they have to again apply for the registration. That means between 1st April 17 to 30th September 17, they have a chance to decide whether they have to apply for registration or not. So by 30th September 2017 would be the last date wherein we have to decide. And then he has to apply for registration in form number REG 20 within 6 months. At the time of making an application in form number 20, he has to furnish all the required documents and details in form number REG 20, and on the basis of the information and documents submitted, he will be issued a certificate of registration in form number REG 6, and that shall be made available to the registered taxable person electronically. That means then after making an application, he would be issued a final registration in form REG 6. Now suppose the temporary registration or provisional registration which has been issued to the taxable person, if he feels that yes, I wanted to register because of the 3 reasons, then he may cancel the registration number and the order would be issued in form number REG 22. However, he has to apply for cancellation within 6 months from the order. Before cancellation of the certificate of registration, registered person shall be served a show cause notice in form number REG 23, and opportunity of being heard would be provided that why he wanted to cancel the registration. If a person registered under the earlier law he is not liable to be registered under the Act. He may at his option file electronically an application in form number REG 24 for the cancellation of the provisional certificate of registration. So he has to need to file form number 24, and proper officer then will, after conducting an inquiry as deemed fit, he will cancel the said provisional registration. That means he has a power to scrutinize whether this person is cancelling his registration in a within the four corners of the law. So this is as regards the migration of the person registered under the earlier law. This is the enrollment plan in your state, which has been provided by the GSTN network. So many questions is nowadays coming, especially in the state of Maharashtra. Nowadays, all the taxpayers are receiving an SMS and email that if you have failed to taken the enrollment under the GST, then you need to enroll it very fast because we are now closing the GSTN for some particular period of time. Now, why such kind of messages are there? So here I would like to clarify that state of Maharashtra has issued a trade circular number 35T, wherein it has been provided that all the SSCs who are registered till 31st day of August 2016, only that data they have captured in their system, and therefore only those SSCs would be in a position to take the provisional ID from the GSTN system. So now the next tranche of taxable person from first day of September 2016, that data needs to be given into the GSTN network, and then those SSCs would be given the provisional ID. Now, further, the Maharashtra state has also advised that along with after taking the provisional ID, you have to also upload all the documents which are mentioned in the circular or whatever we have discussed, like place of business, constitution of the business, name and address of the director, partners, proprietor, and so on. All those detail needs to be provided in the GSTN network. But at present, lot many difficulties we are facing, all the taxpayers and consultants are facing as regards the uploading of the document, either because the data is not provided or because the website is not working in a proper manner. And many traders or SSCs are not in a position to upload the data. And then the problem comes whether what will happen, whether we cannot enroll in the GST or what. And on the other side, the state of Maharashtra issuing such type of message. In my personal view, it appears that no, you need not have to worry. Only the thing is that you have to first obtain the provisional ID before 1st of April 2007. All other documents you can submit it later on also, because the migration law as per section 167 of the model GST law says that SSE is having, taxpayer is having an option that after within 6 months period from the implementation of the GST, they have to further apply for registration along with all the documents. So accordingly, it appears that one need not have to be worried if you cannot able to upload the document and enroll yourself within the GSTN network. But provisional registration is must, which you must have to take it before 31st day of March 2017. So this is as regards the migration of the SSE. Once the certificate of registration has been obtained, then it may so happen that some of the details or information furnished at the time of registration may be changed, because change is the fact of the life. Many things would be changed, and naturally that change has to be intimated to the department within 15 days of such change, and such change has to be intimated by filling form number REG 21, REG 11. Sorry. Again, since this GST is a technology driven law, everything needs to be done electronically. This application for amendment in the registration also have to be applied electronically. Now further is said that if the change is in relation to the name of the business, principal place of business, or details of directors or partners or committee members, etc., which does not warrant cancellation of registration, then proper officer will approve the amendment within 15 common working days, and the order would be issued in form number REG 12. That means after, if there is an Any change which does not happen to be a cancellation of registration, proper officer will verify the details, and after that he will issue the amend the certificate of registration, and that order would be there in form number REG 12. If changes are relating to any particulars other than specified above, that means what we have shown earlier, then the certificate of registration shall stand amended upon submission of application from in REG 11. That means what it tries to say, that if any other information is changed, like if the items in which the dealer taxpayer is dealing has to be incorporated, then that change is automatic. He has to just apply online, and the certificate of registration would be amended. At present, under the service tax law, if any item service needs to be added, then the online application has to be filled without any uploadation of the document, and your certificate of registration is changed. However, if they say that if there is a change in mobile number or the email address, then it shall be carried out only after verification through the common portal. That means if your mobile number has been changed or email ID has been changed, then that they will not change it immediately. First of all, they will change, give you the one-time password to your mobile number or your email ID, and on clicking of that one-time password, then and then only your mobile number or email address would be registered. Otherwise, that won't be done. So that much care they are taking, that a person should not change it without any authentication. Further, it says that if there is any rejection or approval or amendment under the CGST or SGST Act, it shall be deemed to be a rejection of approval under the SGST Act or CGST Act. That's what we have seen under the registration, that if there is a rejection of an application, in the rejection of the application, then your application would be rejected under SGST law as well as CGST law. Same way, if there is a rejection or approval of amendment in the registration certificate, then it is deemed that rejection or approval is under the same SGST law or CGST law. So this is as regards amendment in the registration certificate. Next is the cancellation of registration. Now, certificate may be cancelled due to two reasons. Number one, a certificate of registration can be cancelled at the instance of the registered taxable person, or it can be cancelled from at the instance of the proper officer or a GST department. Let us first of all see which are the circumstances under which registered taxable person would like to cancel his registration certificate. So let us see which are the circumstances under which the registered taxable person opt for the cancellation. If there is a business has been discontinued, or business is transferred fully on account of amalgamation with other legal entity, demerger of the entity, disposed of the entity, or death of the proprietor, then in that respect, now there is no existence of the existing entity, and naturally then there has to be a discontinuation of business. Third one is a change in constitution of business. A proprietorship business converts into a partnership firm, or a partnership firm converts into an LLP or a private limited company, or a vice versa. Then also then there is a change. Since there is a change in constitution, the certificate of registration needs to be cancelled. And last one is the taxable person is no longer liable to be registered under Schedule 5. Under Schedule 5 says that talks about the turnover criteria and non-turnover criteria. So that means it talks about the turnover criteria. If it says that if a taxable person's turnover is less than 20 lakhs in any financial year, then he has an option to go out from the scheme of GST. Then in that respect, he may opt for the cancellation of registration certificate. Now, under what he has to do if he wanted to cancel the registration certificate? It provides that a registered taxable person has to file an application electronically in form number REG 14. He has to file an application in form number 14. Along with the application of cancellation, he has to also submit the details of closing stock and the liability thereon, along with the application and relevant other documents in support of the claim thereof. That means at the time of filing an application, he has to also give the details of closing stock and the amount of tax which is involved in that, because that tax cannot be taken as a credit to be carried forward to further, because now there is no need to carry forward the credit, because there is a cancellation of registration. There is no provision of refund also of the unutilized credit of the closing stock, but the law says that that amount needs to be paid to the government because you are not selling the goods of that closing stock, and there is no tax which the government can recover, and that is the reason why the amount which is there in the closing stock, one has to compute the tax liability and he has to discharge the tax liability on the same. This is also the present law. Under the VAT laws also similar kind of provisions are there. Further, it says that a person who has taken the registration voluntarily, he cannot cancel the registration certificate before the expiry of 1 year of registration. That means he has to minimum hold the certificate of registration for a period of 1 year if he has obtained to take the registration under voluntary scheme. Whenever that person who cancels the certificate of registration, he has to file a final return as provided under return rule number 19. That means after he has to file all the regular return and the final return after the cancellation of the registration certificate. When we come to the return, at that point of time, we will see at what point of time he has to file the final return and in which form he has to file the final return. Now let us see how the cancellation of registration is taking place at the instance of the officer. Let us see which are the circumstances under which the proper officer will ask for the cancellation of registration certificate. It says that the registered taxable person, if he has contravened the provisions of the law, then the proper officer may issue him a notice that I am cancelling your certificate of registration. Number 2, taxable person discharging tax liability under a composition levy, and he has not furnished the return for a continuous period of 3 tax period. That means we know that the person who is discharging the tax liability under the composition levy, he has to file the return quarterly. That means here it says that if he is not filing the return for a period of 3 tax period, that means for 9 months continuously, then in that respect the proper officer may serve him a show cause notice that why his certificate of registration should not be cancelled. Third is the taxable person who has not furnished the return for a continuous period of 6 months. That means if a person does not file, registered taxable person does not file the return for a continuous period of 6 months, 6 monthly return, then his certificate of registration may be cancelled. And last one, when a taxable person who have obtained the registration voluntarily and not commence the business within a period of 6 months from the date of registration, then his registration certificate might be cancelled. Now here it says that he has not commenced the business within 6 months. So what it tries to say? That means what do you mean by the commencement of business? Can we say that commencement of business, that means the date from which I have applied for the registration, that is the commencement of business? To me it appears no. Commencement of business, that means they are expecting by the authority that some proof needs to be provided once you have obtained the registration under a voluntary scheme. Yes, that I have started my business activity and I have either purchased the goods or purchased the anything for the business, then and then only it is said to be a commencement of the business. Though if you are filing the nil return, can it be said that I have commenced the business or no? I think law would be clarified when the final bill will come. So under this situation, the registration certificate would be cancelled by the proper officer. Now before cancelling the certificate of registration, the proper officer will issue him a show cause notice in form number REG 15 and request the taxable person to reply within 7 days why his registration certificate should not be cancelled. So he would be giving an opportunity that and he has to explain the reason why he wanted to cancel his or surrender his certificate of registration. Further, it provides that the cancellation of registration shall not affect the liability of the taxable person to pay the tax and other dues under the Act for the period prior to the date of cancellation. That means once his registration cancellation is cancelled, then he cannot take a plea that I will not pay my past dues. वैसे तो नहीं चलेगा. So this is what all about the circumstances of cancellation by the proper officer. Further it says, yeah, display of certificate and GSTI number. We know that under the present VAT laws, it is mandatory that all the taxable SSEs who are dealer, who has obtained the registration, they have to display their certificate of registration in their place of business. Similar kind of provision is also there under the GST law, wherein it says that it is the duty of every registered taxable person to display his certificate of registration in a prominent location at his place of business, as well as at every additional place of business, or at every additional place of business. So he has to display his certificate of registration. Not only certificate of registration, but he has to also display his GSTN number in the name board exhibited at the entry of his principal place of business. तो उसको उसका GSTN नंबर है वो भी शो करना है at the entry of the principal place of business, so the person who comes to his office will able to know that this is a registered taxable person. I don't know why such kind of information provided. Let's hope that they will not come out with a situation that whenever you give a phone, first of all, you have to give your GSTN number to your trader that yes, I am a registered taxable person. I don't know what is the reason of having such kind of provision that this display of GSTN number in the name board which has been exhibited at the principal place of business. But let's we have to follow the rules which has been provided, and this has been provided in the registration rules. Then this is the flow chart which for determining the requirement of GST registration, which is self-explanatory. So I'm not going into that. And this is the GST registration process, existing registration process. I am thankful to the Tax Hill because they have provided this beautiful flow chart, which makes us very easy to understand the whole flow of flow. Now, this is the list of forms which are there under the GST. Total 26 forms are there for the registration. Yeah, okay. Total 26 forms are there under the registration process. Though we are saying that there is an ease of doing the business or less paperwork, but if we count, then there are 26 forms needs to be filed or to be given to the registered taxpayer. So where is that simplicity is there? I don't know. Now let's come to the payment portion, and I will take a 1-minute break. Once we are registered with the tax authorities, the next thing which would be important is the how to make the payment. Now many of you may be surprised that payment karna hai usme kya hai? It's very simple. You issue a check and deposit it into the government treasury, payment ho gaya. What is the big deal in that you are explaining the payment provision? Yes, you are right. There is nothing great about it, but then also there are certain things which needs to be understood while making the payment. Let's see what are the things which under the payment module. The law provides that payment of tax, interest, penalty or any other amount has to be deposited in the government treasury by using either internet banking, credit card or debit card, NEFT, RTGS or over-the-counter payment. So this is the only 5 modes in which you can make the payment. And naturally, other than this, koi payment ka mode hota bhi nahi hai. Now further it says that whatever charges the taxpayer or whatever the charges which has been charged by the bank for issuing either NEFT or RTGS or credit card or debit card, that have to be borne by the taxpayer. So that means this is an additional cost to the taxpayer for which they have to incur. Now on the one side, our Mr. Prime Minister Modi says that there has to be a paperless transaction and there has to be a electronic transaction, and now when we are doing electronic transaction, then they are charging commission or charges. But now I think latest they have said that now for 2 months or 3 months period of time, they will not charge any commission for if you are using or making the payment by credit card or debit card. Let's hope that this will continue so that unnecessarily taxpayers will not be burdened. Now coming to the over-the-counter payment. What do you mean by this over-the-counter payment? Over-the-counter payment means on the counter when you are giving cash or check or demand draft for making the payment of tax. So while opting for this OTC mode, the law provides that this OTC should be used for the deposit of rupees 10,000 per challan per tax period only. That means if you want to make the payment of 25,000 rupees, then you have to go thrice to the bank, one with 10,000, 10,000 and 5,000, or otherwise you cannot make the payment of through the over the counter payment. This is how they are trying to discourage the over the payment transaction. Now this is the rule for the OTC transaction or OTC mode. But for every rule there is an exception. This provision is always there. So which is the exception? Let us see that this restriction of using OTC shall not be applied to deposit made by the government department. Naturally government department को कोई कानून नहीं लगता है. Then further it says that recovery of dues by the officer where a person is not registered. Yes, that is what I was telling you in respect of those persons who are not registered. तो उनको temporary registration दिया जाता है. Why temporary registration? So that immediately payment भी कर पाए. Now to make the payment immediately, if they are not registered and over the counter payment cannot be made, so that's why they are saying that yes, if the for recovery of dues or recovery of taxes during by the officer, either at the time for the person who is not registered or during the if the person is registered but during the investigation or enforcement, if some ad hoc payment has to be made, then at that point of time it has been said yes that the government officials have right, they can take the check or a demand draft or cash from that person and make the deposit to the government treasury. So this is an exception to that, so there is no issue. Further, it says that all the payments has to be made by generating a challan from the GST network, and that is in form number PMT4. PMT stands for the payment, GST PMT4 challan, and this challan has to be generated from the GST network and would be valid for a period of 15 days. That means what will happen that nowadays if any SSC wanted to make the payment of tax, what as a tax consultant we do? We generate the challan from our system, either from the software or from the Excel or Word. We have prepared the challan format and we will send it to our client. But now that in GST era that will not work because we are a technology driven law, wherein whatever payment you wanted to make, you have to generate a challan from the system, and from the system will generate one unique identification number code for that challan, and that challan would be valid for a 15 days period of time. So within 15 days you can you to use that challan. Otherwise what is to be made? Otherwise we have to generate the challan again. Nothing great about it. Now whatever payment, cash payment which we taxpayer made, that will be credited to the electronic cash ledger, and this electronic cash ledger would be maintained by the GSTN network, and that would be in the GST PMT3 for each taxable person. So friends, you did not worry, client or an tax consultant need not have to maintain this electronic cash ledger. That would be maintained by the GSTN network for all the taxpayer. So whenever any tax payment is made, at that point of time they will credit it to the electronic cash ledger. Then another ledger is also maintained by the GSTN network, which is known as an electronic credit ledger. So what will come in the electronic credit ledger? Whenever a taxable person procures the goods and or services, at that point of time he might have paid the taxes on GST on that goods or services. So all that input tax credit or taxes which has been paid, that would be credited in his electronic credit ledger, which is maintained in form number GST payment PMT2, which is also maintained by the two. तो अपने पास दो लेजर हो गए, one is electronic cash ledger and another is electronic credit ledger. In electronic cash ledger, whatever actual payment made, that will come. In electronic credit ledger, all the input tax credit, which that means the taxes which has been paid, that will appearing in electronic credit ledger. Now the question is where you will use this electronic cash ledger and credit ledger. Then the law provides that you can use the electronic cash and credit ledger in making payment of taxes, interest and penalty or any other amount. So वहाँ भी उन्होंने restriction के this kind of payment only you can make. Then further it says that a unique identification number will be generated at the common portal for each debit or credit in the electronic cash ledger or credit ledger, and this number would be indicated at the time of discharging tax liability in the electronic tax liability register. So this is the third ledger or a third register. We will come to in a little in a minute. Now it says that all the payment would be unique identification number would be generated from each debit or credit in ECL. Now friends, you will observe that while you are making the payment through this electronic mode, there is no mention of period is there in the challan. This is a uniqueness. In the present VAT laws, it says that whenever you are making the payment, you have to mention the period for which period you are making payment. For income tax also, you have to mention for which assessment you are making the payment. Under the VAT laws, you have to mention for which period you are making payment. But under the excise law or under service tax law, no such requirement is there, because there the some different PLA ledger account is maintained. That's the reason. So here also now there is no need to mention the period, and unique identification number is mentioned, and from there the tracking would be there. Further, the advantage I will explain in a little point of time after explaining the electronic tax liability register. So what is this electronic tax liability register? Electronic tax liability register is also maintained by the GST and in the common portal for every taxable person. So what kind of information would be there in ETLR? It says all the amounts which the person is payable shall be debited to the said register. That means whenever a person supplies the outward supplies, that means whatever sale or services are provided by the taxable person and the tax liability arising out of that, they all would be debited in the electronic tax liability register. Further, it says that means what kind of other tax liability would be there? Then it says that the amount payable towards tax, interest, late fees or any other amount payable as per the return filed by the taxable person would be over there. That means you know that every month return needs to be filed. In that return, that means outward supply, whatever is the tax liability, that will go into the return. Further into this electronic tax liability register. Then amount payable towards tax, interest, late fees or any other amount payable is determined by the officer in pursuance of any proceeding under the Act or ascertained by the taxable person. That means at the time of assessment, if any tax liability arises, then that will also go to the electronic tax liability register. Third is the amount of tax, interest payable as a result of mismatch under section 29, 29A or 43C. That means if there is a mismatch in the input tax credit, then that in SSE has to, taxable person has to pay the tax along with interest. This mismatch means every time whenever you file the return, outward registered and inward register, I will explain you in the depth when we'll come to the return thing. At that point of time, there is a matching concept is there, that whatever I have purchased, that the other person must have to acknowledge that yes, he has sold it. Then and then only I can get the input tax credit. If there is any mismatch between there, then I am not eligible to take the credit of the same, and I have to reverse the credit or I have to pay the tax and along with interest. And last is the any amount of interest that may accrue from time to time. Wonderful. So that means we need not have to calculate the interest. Our electronic tax liability register will automatically calculate the interest. So what we have to do? We have to just observe it, that whether the calculation of interest has been made correctly or not. So a lot of our time would be saved. Everything is electronically. So again, it's a technology driven law. We have to just observe whatever is done by the system is in a correct manner. So this electronic tax liability register, every liability of the taxable person would be accumulated over there. So now what has to be done? At the end of the month, before 20th, because 20th is the last date of payment, we have to see all the ledgers. First of all, we have to see our electronic tax liability register, wherein our total tax liability is there. Number two is our electronic cash ledger, wherein we must have paid the amount in cash towards the tax liability. Third is the electronic credit ledger, wherein all our input tax credit is there. And fourth one, we have to see our bank statement, because ultimately we have to make the payment from our bank statement, transfer it to the electronic cash ledger, and so that the payment has to be made. Friends, so what we need to do every day? Every day we have to advise our client that you have to just to see it on your desktop, that all these four ledgers are there, and then you have to see whether my sufficient balance is there or not. And you, in the electronic cash ledger, if it is not there, then he has to make it available from the from his bank. He has to also see the electronic credit ledger every day, because whatever goods he has purchased from his supplier, whether he has entered or not, if he has not entered or if he has not rightly entered, then also you will not get the credit. So what we have to do, that person has to call the other gentleman to rectify the error, then and then only he will get the credit of the same. So now one has to be very much vigilant about the all these four ledger, otherwise there would be a difficulty. Now next is how to discharge the tax liability. Here see the beauty of GST law. They have all the things has been codified. How you will discharge the tax liability from your electronic cash ledger and credit ledger. It says that first of all, your tax liability would be discharged in the following order. First of all, self-assessed tax or other dues related to a return of the any earlier previous tax period, that would be adjusted. That means अगर आपकी कोई जूनी tax liability है, so first of all that would be cleared it out from your ledger. That means first come first. पहले जूनी liability clear करो, जूना कचरा clear करो, and then only new liability. Then it says self-assessed tax and other dues related to a return of a current tax period. फिर current tax period की tax liability adjust होगी, and after that it any amount is payable, including the recovery of demand, that would be adjusted. So this is how the it has been codified. So then there is no need for, now you understand that there is no need to write the period, because whatever tax liability of earlier period is there, that would be further adjusted. You cannot, you don't have right to say that this amount would be appropriated for this period of return. So this is how it has been codified. And it says that the unique identification number would be generated at the common portal for each debit or credit in the ECL and ETLR. That means whenever the funds have been transferred from ECL to ETLR, then at that point of time, unique identification number would be generated for the transfer entries so that you can have a track of that. This is the GST and Chalan process, which has been explained in a graphical manner. Again, the tax seal has prepared this whole chart in a very lucid and simple manner. So I am not explaining it to you again. There are 6 forms in this list of payment which are there, but frankly speaking, this is just for the purpose of listing. We need not have to remember all the forms. Then comes the returns under the GST law. So the obvious question would be, do I need to file a return? Yes. What's the reply? Yes, definitely. In every law, whenever a person is registered, he has to file a tax return, self-assessed tax return. Then and then only the authority will come to know that whether the liability of the tax has been discharged in a correct and a right manner. So what are there in the return? It says that every registered taxable person is required to file, number 1, details of outward supply, details of inward supply, and the final return for the prescribed tax period. For the prescribed tax period, that means he has to upload details of outward supply, that means from the sale side, details of inward supply, that means from the purchase side, all purchase register, and finally the final return. And this he has to describe for the prescribed tax period, that we will see in a couple of minutes what is the time limit for filing the return. Further, it says that return needs to be filed even if there is no business activity. That means nil return also needs to be filed for that particular tax period. Common return is prescribed for CGST, SGST, IGST, and additional tax, if any is there. Now it would, instead of additional tax, it would be a cess. So common return form has been prescribed. Now quickly let us see which are the returns which needs to be filed. First says that the outward register. This outward registered outward supplies has to be filed in form number GSTR1. So what kind of detail one needs to provided in this register? It says every registered taxable person have to furnish the details of outward supply. That means taxable supply, zero rated supply. Zero rated supply means the supply on which there is no tax liability is to be paid. Like say for example, supply to an SEZ unit or supply to a person who is located outside India. That means export of goods or services. This all are considered to be a zero rated supply. Then interstate supply, return of goods, exports, debit note, credit note, and supplementary invoices. Debit note or credit note has to be issued whenever there is any increase or decrease in the tax liability. That it is always to be issued by way of issuing debit note or credit note. So all the tax details of outward supply needs affected during a tax period and affected during an earlier tax period for each registered place needs to be provided in the GSTR1. So what it tries to say that you need not have to provide the details of the current tax period, but also for the tax period of the earlier tax period. Now you may have a question why the details of earlier tax period needs to be given. The simple reason is that in the GST law, the return, there is no concept of revision of return. That means you cannot revise the return. So for example, if you have issued the invoices in the month of May 2017, presuming from April 17 the GST is implemented, and in the month of May 2017 you have forgotten to put the details of that invoice in your outward supply, then in the month of July you come to know that this invoice has been forgotten. So in the month of July you have to say that this invoice would be a period of an earlier period, but then also you have to file it in the details of the for the month of July 2007. We will quickly see how and under which column it has to be filled while we see the return over here. This return has to be filed by the 10th of the next month. That means all these returns have to file on a monthly basis. That means return for the period of April 2017 has to be provided by the 10th of the next month. That means 10th May तक आपको return file करना है by giving all the supply side which you have incurred during the month and the previous month and the earlier tax period. Once you have submitted the details of outward supply, immediately the GSTN will provide this information to your customer. That means the person who has purchased the good. So they will have all the details of the supplies which has been made by me, and therefore they will get the details of that. And this would be there in part number A of form GSTR 2A. Now let's see, that means on the 11th or 12th they will get all the information of that, because for them it's a purchase, so that will come into their inward supply. Now let's quickly see how the return needs to be filed or how it looks like. First one, it says GSTR1. So it says first of all GSTI number and name of the taxable person. This would be an auto-populated, but because whenever you want to file the return, first of all you have to do an login, and then only you can file the return. So GSTN number and name of the taxable person would be appearing automatically. That means it is auto-populated. Third is the aggregate turnover of the taxable person in the previous financial year. Now they have defined aggregate turnover, and it says aggregate turnover means defined under, we have seen that it would be on an all India level basis. So now if whenever we are filing the detail in the month of April 2000 and 10th May, on 10th May 2017, for the period of April 17, we need to put the turnover of financial year 2016-2017. Now it says aggregate turnover as defined. Now aggregate turnover of the all India level basis needs to be put over here and not of that particular state. Then fourth is the month and year that you have to put, that April 2017 as a month is the April and year is the 2017. This is the aggregate turnover. Just for the sake of simplification, I have again reproduced it. Now table number 5. Now in the whole GSTR1 there are various tables are there, and wherein the details need to be compiled and put it over there. Now let's quickly see which are the details which are required. First, in the table number 5, we have to give the details of taxable outward supplies to a registered person. That means if I am a registered person under the GST and if I have supplied the same to another registered taxable person, that means a B2B transaction, business to business supply, that will come under table number 5. What I have to provide? First of all, I have to say I have to give his GSTI number, then invoice number, invoice date, invoice value, whether it's a goods or services, because it's a goods and service tax law. So we have to identify whether this invoice is towards supply of goods or whether this is for the supply of services. Then HSN number or SAC. HSN number is required in respect of supply of goods, that is the harmonized state number, and SSC is the services accounting code. These are the 119 codes which has been there under the service tax law. That code has to be mentioned over the provision of the services. Then taxable value. Then we have to determine whether in this transaction, whether IGST is applicable. Then we have to insert of the figure over there. CGST and SGST rate and amount needs to be mentioned. Next column is the POS, only if different from the location of the recipient. So place of supply, what it says. It says if the place of supply, if it is different from the location of the recipient. So when such kind of transaction arises, whenever a transaction of bill to ship to concept, that means say for example, if Mr. A has sold the goods to Mr. B, then Mr. B has instructed Mr. A that you please deliver these goods to Mr. C, then in that respect, Mr. A will directly ship the goods to Mr. C, and then in that respect, place of supply is different, because place of supply is to Mr. C, who might be in the same state or might be in some other state. So then in that respect, if there is a difference, then you need to provide that information also. Then next column is that indicate if supply attracts reverse charges. Then we have to identify whether this supply attracts reverse charge. That means the person who received the services needs to discharge the tax liability. Next column is that whether tax on the invoice is paid under the provisional assessment. That means sometimes it may so happen that the taxpayer need not understand that what rate of duty would attract this transaction. Then in that respect, he may discharge the tax liability on an ad hoc basis and then request the assessing officer to assess him on a provisional assessment basis. And last column is GSTN of the e-commerce operator if applicable. That means if the supply is to the e-commerce operator, then the details has to be compiled and provided over here. So when we are observing this table number 5, it appears that all the sales register, sales details needs to be given. All the sales details needs to be given on a bill wise basis. That means for each bill we have to give the separate details and fill in over here. Not only that, if in the one invoice, if you are supplying 5 supplies which are having different HSN code number, then in that respect you have to again bifurcate on the basis of HSN code wise. So that means from here you can understand that what kind of information department wants. That means again I am telling you that this is a technology driven law. So that means our system, accounting system would be so robust, or the ERP system which is used by the taxes will be so robust that it should be compiled all this information. Otherwise, if we see that if you wanted to compile it manually, it would be next to impossible. Right? Now let's come to the table number 5A, which says the amendment to the details of outward supply to a registered person of earlier tax period. That's what I was saying, that say for the month of April 2017, I have forgotten to upload my one of the invoices, and then later on the 25th April, that person has said, the person who has purchased the goods from me, that sir, you have not uploaded my information, so please upload it. So now I cannot revise my detail of for the month of April, so I have to file this detail in the month of May, and at that point of time that invoice will come over in for table number 5A, because there is an amendment to the details of outward supply. So what it says, if there is an amendment, then original invoice number I have to give, number and date, GSTN number, revised or original. If there is a revision, then also I have to provide. If there is an original, that means if I have not provided the details earlier, then also it has to be mentioned over here. And then the same details, whether it's goods or services, we have to also give the HSN number or a service accounting code, taxable value, then what whether it's an intrastate or interstate. If it's an interstate, IGST would be applicable. If it's an intrastate, then CGST and SGST would be applicable. Rest all the column like place of supply, tax payable under the reverse charge, under provisional assessment, and supply to the e-commerce, all that details is same as per the 5. But here only the details of the earlier tax period will come. Now let's go further. In table number 6, we have to give the details of all taxable outward supplies to a consumer where the place of supply is other than the state where the supplier is located and invoice value is more than 2.5 lakhs. That means in here we have to give the details of the transaction between B2C, business to consumer, and that is also in the interstate transaction. That means the business supplier is located in Maharashtra, consumer is located in the state of Gujarat, and the transaction value is more than 2.5 lakhs. Then in that case one has to give the details in table number 6. What kind of details? First of all, we have to give the in which state the supply has been made. If it has been made in the supply of Gujarat, we have to write that code. Name of the recipient, then invoice number, date, value, whether it's goods or services, HSN code, SSE, taxable value. No, normally this is, since this is an interstate transaction, CGST and SGST would not be there, only IGST would be there. Again, we have to mention whether the place of supply is different from the location of the recipient. And last one is tax on this invoice is paid under provisional assessment or not. If the tax is paid under provisional assessment, then that detail we may have to mention over here. Then table number 6A. Here we have to give the details, same amendment which has been there in the outward supply to a consumer for the earlier tax period where there is an interstate transaction and invoice is more than 2. As we have explained in the original invoice, here also when the transaction is between B2C of an earlier tax period, then details has to be given. Now friends, point it well that whenever there is an amendment to the taxable outward supply, one has to take the transaction, because if you will observe over here, we have to give the details of original invoice as well as the revised invoice. If there is any change is there, increase or decrease in the taxable value, then we have to give the original invoice as well as the revised invoice, so that it tries to tagging of the transaction. Or standalone, you cannot enter any value over here. So this is the another beauty of the GST law, that there has to be a tagging of each and every transaction. Let's go further. Now it says taxable outward supply to a consumer other than 6 above. That means this will include B2C transaction of a value less than 2.5 lakhs rupees. So this will include the interstate transaction as well as intrastate transaction. That's why the details for IGST, CGST and SGST is given. Here also, first of all, we have to say whether it's goods or services. If it is goods, we have to give the HSN code. If it's service, service tax code needs to be given. Then it said state code, where the supply has been made, that has to be given. Aggregate taxable value, taxable amount and tax on his supply is paid under the provisional basis. That information needs to be provided over here. Then 7A is naturally amendment in the taxable supply, same as we have explained for 5A and 6A. That is what detail one needs to provided in 7A. Next is the nil rated, exempted and non-GST outward supply. So now it says that we have to give the details for nil rated. That means wherein there is no tax liability. That means if it is an export or supply to the SEZ unit or to a developer of SEZ unit. Exempted, that means by way of notification, if government says that this particular kind of goods or service are wholly exempt from tax, then that would be covered over here. And non-GST outward supply, that means those are not goods falling under the goods or service definition, they are considered to be a non-GST supply. So that detail one has to need on a monthly basis. Again, you have to make an bifurcation, whether it's an interstate transaction or an intrastate transaction, whether supply is to the consumer or whether supply is to non-consumer, or interstate transaction with a consumer or interstate transaction with consumer. So this detail also needs to be given. So now you will observe that basically whole sales side or a revenue side needs to be provided over here, so that at the final return that would be tallied or matched with your financial statement, and it has to be matched, otherwise you have to give a reconciliation statement why it is not matching, right? Next, supply is exported including the deemed export. So now here on the ninth column we have given the details of export. Now on the 10th we have to give the details of export. What it tries to say, description, then invoice number, date, value, goods or whether it's goods or services, HSN code, taxable value. Then we have to give the shipping bill or bill of export. And then if it's an intrastate, it's a CGST or IGST, CGST or SGST, and in respect of interstate transaction, IGST would be applicable. So that detailed supplies of exported needs to be given over here. Next our table is the amendment to the supplies export. If there is an amendment of the previous period, that needs to be provided in table 10A. Now very important, taxable liability arising on account of time of supply without issuance of invoice in the same period. So what kind of information? So if you recollect that the time of supply has been divided, time of supply for goods and time of supply of service, both are different, right? When the time of for the goods, time of supply is at the time when the goods are dispatched. On or before the dispatch of the goods, he has to issue the invoice. In respect of service, it says that before the invoice would be issued within the 30 days from the date of provision of service or date of completion of service or receipt of money, whichever is earlier, you have to issue the invoice within 30 days period of time. So say for example in the month of April, I have received the advances. So I naturally have to issue the report it in my outward supply, but I will issue the invoice. I will have a time for 30 days. So I will issue the invoice on say 15th of May. So that will not that means that the tax liability arising on account of times of supply without of issue of invoice in the same period. So that means I have to discharge my tax liability in the month of April because I have received the advance, but the bill will be issued in the month of May. So that detail needs to be incorporated over here in table number 11. And 11A is in respect of amendment to the tax liability arising on account of time of supply without issuance of invoice in the same tax period. That means if any earlier tax invoice has been issued in the earlier period, then that needs to be given over here. And here again original detail and revised detail both needs to be given. Then 12th is the tax already paid on advance receipt on invoices issued in the current period. That means here the detail needs to be provided in the for the current invoice, the details need to be provided, but the tax has been already paid. So in the month, in my earlier example, the tax which has been issued in the month invoice would be issued in the month of May, but the tax for the same has been paid in the month of April. So that detail I have to pay it given in while filing the return for the month of May, that this is the invoice number, this is the transaction ID, and tax paid on the receipt or advance. So that means I have to again take it that for the month of May I have already paid in advance through this taking information. So this is a very beautiful way in which the whole transaction would be tagged. Last is the supplies made through e-commerce portal or other companies. So whenever you are making the transaction with e-commerce company, you have to give the detail. In part 1, you have to give the details when the transaction is with the registered taxable person, and in part 2, transaction with the other than registered person, unregistered person, that means the consumer. So in part 1, B2B transaction, in part 2, B2C transaction. So that detail needs to be provided. This is more or less similar to the earlier one, so I am not explaining it again. Fourth, invoice issued during the tax period, including invoices issued in case of inward supplies received from unregistered person liable for reverse charge. So now here the government has taken the power that in respect of certain supplies of goods or services, they will help person who receives the services to be discharge the tax liability in the reverse charge mechanism. So if that particular kind of goods or services of a person is buying it, then he has to give the detail and discharge the tax liability under reverse charge mechanism. So from this it appears that all unregistered person would be if you buy the goods or services from unregistered taxable person, then the service recipient has to discharge the tax liability on the same, provided it has been mentioned by notified by the government. So that detail needs to be given: serial number, series of number of invoice, from and to, from whom and to whom, total number of invoice and number of cancelled invoice, and net number of invoices issued. So this details needs to be provided. Now we have filed this outward supply by the 10th of the next month. And I have explained you that once you have filed the outward supply by 10th of the next month, so 12 तारीख को वो सारी डिटेल चली जाएगी सामने वाले पर्सन को who have purchased the goods, that would be an inward supply for them. So now what they will do? They have to file also the inward supply. Now when I have filed outward supply, now I have to also file the inward supply. So means I have purchased the goods from other person, so that would be my inward supply. Now what details has to be given in this inward supply? Every registered person shall furnish electronically details of following supplies affected during the tax period as well as affected during an earlier tax period. Here also in the same month whatever goods or services I have procured, that details I have to provide it, as well as whatever the goods or services for any earlier tax period, that also have to be provided if that has not been provided earlier. Now what kind of invoices? First of all, inward supplies of taxable goods or services, inward supply of services on which tax is discharged under reverse charge mechanism, inward supplies of goods or services taxable under the IGST Act. That means if or for the interstate transaction, because that credit will not be would be eligible. Debit or credit not received in respect of such supply, this detail needs to be provided. Moreover, before that, this detail has to be supplied before 15th of the next month. So 10 तारीख तक outward supply है, 15th तक का inward supply है. So whatever I have the other person has sold, that will become my inward supply, and it would be auto populated in my inward tax register. That means GSTR2. That we will see it in a couple of minutes. Now over and above this detail, the taxable person also have to say that this is the my eligible input tax credit and this is the ineligible tax credit. Friends, you are aware that in the law it has been provided that certain input tax credit are totally blocked. That means they are not eligible for the input tax credit, and there are certain credits which are apportioned. That means based on the taxable and non-taxable criteria, certain apportionment of input tax credit is to be done. So that also needs to be provided in your GST2 register. Now let's quickly see what and how the information has to be provided in GSTR2. First, the details of inward supply from a registered taxable person, including service supplied received from an unregistered taxable person in case of a reverse charge. So first of all, we have to say that whatever purchases we have made from a registered taxable person, that detail needs to be incorporated. Now friends, these details would be auto-populated because the person from whom I have purchased the goods, that would be that he must have filed GSTR1. So on that basis, the GSTN will intimate it to me that this is your inward supply. So it would be auto-populated in my GSTR2. So I have to verify whether all the invoice purchases or procurement of goods or services has been taken place or not. If it is not happened, then I have to communicate to the other guy from whom I have purchased the goods or procure the goods or services and intimate it that, boss, you please revise your, file your details in the next month, so that it would be an eligible credit to me. Then second is I have to also give the details of the supplies which has been procured from unregistered person and on which I have to discharge the tax liability under a reverse charge mechanism. Now this won't be an auto-populated, but manually I have to put it because that details is not available with the GSTN network. Now what kind of detail is required? First of all, GSTN name, and if no GSTN, then name of the unregistered supplier, invoice number, date, value, whether it's goods or services, HSN code or SSE, taxable value. Then I have to identify whether it's an interstate inward supply or an intrastate inward supply. If it's an interstate supply, then I have to to put it in an IGST. If it's an intrastate supply, I have to put it in CGST and SGST. Then again, if there is any change in place of supply, then in that respect I have to mention that. Then very important, 15th, eligibility of ITC as input or input capital goods or input service or none. That means now I have to decide if this inward supply is eligible for ITC and it is covered under the definition of input, under the definition of capital goods, and in the definition of input service or not. If it is not covered within these three, I have to say none and I won't be eligible to the credit. Then next column is total tax available as ITC. That means I have to decide whether this particular invoice from on which I have procured the goods or services that is eligible for ITC or not. And then I have to say in the last column ITC be available for the month, because in respect of certain apportionment or block credit, and on that basis I have to determine whether this for this particular month I would be eligible for the input tax credit or not. If there is an installation of tower or pipeline, it has been provided that the input tax credit would not be available in the very first month. It would be available in a staggered period. First of all, it would be available 1/3 of the total tax credit. Then in the next financial year, it would be total 2/3 of the credit would be available. And in the next balance, next financial year, that means in the third year, balance credit would be eligible. So accordingly, this needs to be filled in. Then it says supplies attracting reverse charge. Others claimed by the receiver of the taxable person would include supplies received from unregistered. This also would be auto-populated in respect of from the registered taxable person, and in respect of unregistered person we have to key in the details. So in table number 4 we have to give the details of all the inward supply. 4A, again the same, amendments to the details of inward supply received in the earlier tax period. That means if by chance, if the other person has not uploaded that detail, then in the previous tax period, then he has to mention it in the current tax period and the details needs to be given. Again, there is a tagging of the transaction, otherwise everything is same. Fifth one is the goods or capital goods received from the overseas, that whenever you are importing the goods or services, you have to give the details separately. What kind of details? You have to give the details of bill of entry number, date, value, HSN code, and taxable value. Naturally, it would be an interstate transaction, so IGST rate and amount needs to be mentioned over here. And then you have to identify whether this capital goods is eligible for credit or not. And once it has been identified that yes, it is eligible, then the next thing is whether total IGST is available, total IGST available as ITC, and next would be the ITC available for the month. So as I have explained you that in the example of installation of tower or pipeline, I have to bifurcate that what is the total credit available and what is the available for the month, and balance credit would be carried forward to the next period. Then services received from a supplier located outside India. That means the import of services. We have to give the details of import of services, just as we have given the details for import of goods. Similar manner पे import of services की detail देनी है. What kind of? It says invoice number, date, value, SSC and taxable value, and IGST rate and ITC admissibility. And 6A is in respect of amendment in the services received from a supplier located outside India. Then supplies received from a composition taxable person or unregistered person and other exempt nil or non-GST supplies. Now what do you mean? If you are procuring the goods or services from a person who is discharging his tax liability under a composition levy, then in that respect I have to give the details. Now that person need not have to levy the tax separately, but I have to mention in my inward register. Then if a person who is supplying, who is not registered person under the GST, and if I am procuring the goods or services, that also I have to mention. If I am buying the goods the goods which are either exempted under the GST or attracting nil rate of duty, that also detail I have to give over here. This detail has to be given as an interstate supplies and intrastate supplies and give the whole detail. So again, this detail would be useful for doing the reconciliation at the end of the year. Next is the ISD credit received. That means, you know, the input service distributor, what is the job of input service distributor? They have to receive the credit from their unit, branch or branches, and supply it to the another person. And friends, this even ISD distributor has to file the return on a on a monthly basis, so that all these details would be auto populated if it has been from the return which has been filed. Next is the TDS credit received. As you are aware that if you are dealing with supplying the goods or services to a government department or a local authority, then while remitting the amount, the government department or a local authority needs to deduct the TDS from the remittance, and and they also have to file the return of TDS. Then on the basis of that return, this information would be auto populated and all the details would be provided over here, like GSTN of the deductor, that means the government or a local authority, invoice number or document on which the TDS has been made, date of payment made to the deductee, value on which TDS has been deducted, then TDS IGST, CGST and SGST. All these things would be auto populated. Same way in respect of TDS credit received, we have to also give the details of TCS credit received. You know that whenever a transaction has been made with a electronic commerce operator, at that point of time, electronic commerce operator will do the TCS from the amount to be payable to the supplier, and at that point of time they have to give the details of TCS credit, and this will also be auto populated. Next, ITC received on an invoice on which partial credit availed earlier. That means I have given the same detail example of a installation of tower, wherein I am saying that my in the 3 years period of time I have to distribute my credit. So first of all, I have to give the details of my original invoice, IGST of the earlier period, this month how much I am taking. Similarly, in respect of CGST and HGST, earlier month how much I have taken and now how much I am taken. This would also be auto populated from the previous month's return. Then next is the tax liability under reverse charge arising on account of time of supply without receipt of invoice. Same thing what I have described, mentioned you while we were discussing about the GSTR one, that the liability and the reverse charge arises on the basis of time of supply without receipt of invoice. That detail we have also to be given. And next 12A is in respect of amendment in tax liability under reverse charge. If there is any amendment, then that needs to be provided in table number 12A. 13th table is the tax already paid under reverse charge in earlier tax periods on account of time of supply for which the invoice is issued in the current period. Similar the same thing. So I am not explaining it again. And last one is the ITC reversal. Whenever you know that ICC input tax credit needs to be reversed because of the apportionment of credit or the block of the credit, so that detail also needs to be given. And the third last one is the amendment of the ITC reversal. If there is any amendment is there, then that detail also needs to be provided. So friends, this is as regards the inward supply. So based on the details of outward supply and inward supply, now what will happen? In outward supply, आपकी पूरी outward tax liability आ गई, say for example 10 lakhs rupees. On the basis of inward supply, you have been identified that this much of the input tax credit based on the auto population is available to me, which is say 6 lakhs rupees. So 6 lakh रुपया आपकी input tax credit हो गई. Plus you have to discharge the tax liability under the reverse charge mechanism. That credit will also be available to us. So all this in outward supply and inward supply, ये detail हो गई है 10th or 15th. Now what remains? Now remains is the payment of tax. Based on the outward supply, your liability is 10 lakh. Your inward supply में आपकी ITC मिल रहा है आपको से 6 lakhs rupees, so balance 4 lakhs is to be payable. So वो कहाँ से आ जाएगा? वो return में से आ जाएगा. And this return has to be paid by the 20th of the next month. 20 तारीख तक फाइल करना है. So 10 तारीख तक आउटवर्ड सप्लाई, 15 तक इनवर्ड सप्लाई, और नेक्स्ट 5 दिन में आपको रिटर्न भरना है. रिटर्न में यू नीड नॉट हैव टू डू एनीथिंग बिकॉज एवरीथिंग वुड बी ऑटो पॉपुलेटेड. इट विल टेक एवरीथिंग फ्रॉम योर आउटवर्ड सप्लाई, from inward supply, दोनों को mix कर दिया और आपका return ready होगा, and this you have to file by 20th of the, you have to also make the payment and file the return. If the return is furnished, now the important question is whether I can upload my return without making payment of tax. Say for example, मेरे पास 4 लाख रुपया नहीं है. Whether can I upload the return? Obvious reply is yes, you can upload the return, but this would be considered as an invalid return, and the person to whom he wanted to take the input tax credit, he will not be eligible to take the credit unless and until your supplier has filed the valid return. तो वो रिटर्न की क्रेडिट भी नहीं मिलेगी और that should be considered as an invalid return. So yeah, this 3 return, we have seen this 3 return has to be filed by each and every taxpayer, by the each and every taxpayer if they are following under the normal tax method. Now we देखते हैं in respect of other class of taxpayer who are there. Compounding taxpayer, those who are discharging tax liability under composite levy, they have to file quarterly return, and that return needs to be filed in GSTR 4, and the due date is the 18th of the next quarter. So एक quarter, that means जुलाई में बहुत काम आ जाएगा, monthly return and quarterly return हो जाएगा. Then non-resident foreign taxpayer has to file GSTR file within 7 days after the expiry of registration. Input service distributor has to file by the return by 15th of the next month, क्योंकि उसको inward supply और outward supply मिलेगा तो ही आपका return होगा. So they have to file return in GSTR 6. TDS return has to be filed by 10th of the next month, so that will be going into their electronic cash ledger, that has to be filed in GSTR 7. Then at the end of the year, the person has to file annual return. So every registered taxable person shall furnish annual return electronically in form number GSTR 9. Even the composition dealer who are discharging tax liability under composite levy, even they have to file the for annual return in form GSTR 9A. And this annual return needs to be filed by the 31st December of the next financial year. So that means presuming that GST is coming from April 17, so my annual return would be for the year April 17 to March 18 would due on 31st December 2018. वहां तक हमें annual return भरना है. Now further, along with this annual return, it is provided that registered taxable person whose aggregate turnover during a financial year exceeds 1 crore rupees, he has to get his accounts audited, and such person have to submit the copy of audited annual account and reconciliation statement duly certified by a chartered accountant or a cost accountant. So along with this annual return, one has to file also the reconciliation statement with the return and with the financial statement, and naturally that job we have to do it by a chartered accountant or a cost accountant. So friends, these all are the returns which a person has to file under the GSTN. So how many returns are there? 3 common returns: GSTR 1, GSTR 2, GSTR 3. So 36 in a month, 3 returns by 10th, 15th and 20th. So 36 return हो गया. If your client is a compounding taxpayer, then every quarter में you have to file return. तो और एक 4 रिटर्न वो बढ़ जाएगा, तो 36 and 440 returns in a year. And then presuming that you are not dealing with the ISD or a DDS or TTCS, then you have to file annual return. Along with annual return, you have to do the audit return if the turnover is more than 1 crore rupees. So 41 returns तो हो गया, plus one audited reconciliation statement. This is per state. If your client is having a multi-located in 29 states, then what will happen? 29 into 41, you multiply it. I don't know the multiplication. So friends, there is a tremendous opportunity for all of us. That's why it says that GST meaning is grow and share and go ahead. So that means unless and until we grow together, it won't be possible for a single individual proprietor, chartered accountant or a consultant to go ahead and do this Herculean task of GST and because the compliance level is too high, and I am afraid that how the small or SME sector would be in a position to comply this situation, because every month 3 returns is must. So probably it would be really a challenging task for all of us. And last return, sorry. Last return is the final return. This final return needs to be filed by the person who has cancelled his registration certificate, and that has to be filed within 3 months from the date of cancellation of the order. So this return also needs to be filed by them. Now, what will happen if there is a default in furnishing the return? Naturally, whenever there is a default in furnishing the return, one has to pay the late filing fees. So what are the late filing fees? It says if you have the person, taxable person, fails to furnish the details of outward supply, inward supply or periodical returns or final return by the due date, then in that respect, late filing fees of rupees 100 for every day during which such failure continues, subject to a maximum of rupees 5,000. So for each delay, outward supply, inward supply and periodical return or final return, 5,000 rupees per return per month is the maximum late filing fees which one has to pay. Then it says fails to furnish annual return by the due date. Then in that case, the late filing fees rupees 100 rupees for every day during which such failure continues, subject to a maximum of 0.25% of a turnover in a state. तो हर एक स्टेट का टर्नओवर गिनना उसका क्वार्टर परसेंट is the late filing fees one has to pay. So now the important question, after understanding all this, people are asking me what kind of fees one has to charge for filing all this return. Friends, to me it appears that you have to show this clause, that late filing fees of rupees 5,000. So you have to say that, see, if you don't give me the details or if I don't file your return, you are exposed to pay a penalty of 5,000 rupees. So at least 5,000 rupees fees, I am eligible for that. And this is how I think you can charge from the client. This is the return for a flow chart of the return which has been prepared. This has been already been explained, so I am not doing it again. There are 3 returns: monthly return, annual returns and miscellaneous return. Monthly returns normal SSC है तो उसको every month भरना है. Other than normal SSC, that means a compounding dealer, ISD distributor, casual dealer, TDS deductor and e-commerce operator, they have to file the return and due date has been provided over there. So this is the another flow chart which is over there. So friends, this is what my views on the present subject of the procedural aspect, registration, return, payment of tax and filing of the return. Friends, this is just a background, or I would say glimpses of the filing of return. If you see the return in reality, much more things would be, one has to fill in the detail, but I thought that let me just share with you how this return looks like. Friends, at the end, this is the model picture of a boy and a girl who is playing a dandiya ras. The boy is handling with dandiya with goods, and girl is handling the dandiya of services. Let's hope that both of this couple would play the dandiya ras in an excellent manner and in a near future, so that we are going into the GST at an early stage. And I am sure that all of you are ready for the GST by attending this kind of webinars and so many lectures which has been conducted by the orientation course provided by our Chamber of Tax Consultant, and we are ready for the same. Otherwise, it would be very difficult. And last but not least, before I have wanted to give you one caveat note, that this presentation was based on the model law which has been published in November 2016. So one has to take proper steps before advising, because it is likely that this model law, third law, is expected from the talks which are going by the GST Council. So one has to be very much careful before advising that you are giving from a proper law. Friends, lastly, thank you all of you for the patience hearing in this webinar and listen in my view. If any query is there, then please, I will take it, all the queries. Okay, it will come over here. Yeah. So query by the Sushant Soni is that with a single PAN number, if with a single PAN number, is SSE starts to business? So what you want to try to, so how it? Sushant, are you? Can you write your query again? It appears that Sushant, that you are saying that from single PAN and SSE want to start two businesses, like two proprietary concern, then I think he has to only take one single registration from your query. I'm not able to clear it, but it appears that you wanted to understand that if I am having a two business, then whether I need to take two registration. No, the registration is a PAN based number, so you will have to register only once. Additional place of business only includes the address within the state. Yes, additional place of business within the state only needs to be provided. If it is outside the state, then you have to register in that state. Third, all the queries by the Susan Soni only. Good. Third is in case of a physical verification of the place, if officer has any query, then what he will do? So at present, same thing. In respect of VAT, when that person comes for the advisory visit, he will has to only advise it. He will not raise any query because certificate of registration is already granted to you. So he will just say that this is the manner in which you have to maintain your books of account, or you have to produce the records before the authority. Next query of Sushan is, shall we carry forward the previous month credit? Yes, definitely you are in a position to carry forward the credit in the next month. Next query is GST required to charge inclusive or exclusive in case of an advance received? See, whenever you are receiving an advance receipt, you have an option. Either you have to charge separately, or you have to say that this advance I have received come tax, and while issuing the receipt for advance, you have to mention separately the amount of GST which has been charged in that. Now, Rahul Purani, he says if a person is registered in two states, then will he be required to file returns in both the states? Yes, the taxable person is considered to be a different taxable person, and in both the states he has to file the return. Kaushik Ravindra says registration number will that registration just a minute. Registration number will have the number of entities that a taxable SSE will have. If such SSE will further have an additional location or entity after obtaining the registration number, will that registration number change? See, I have explained you that registration number will not change. Registration number consists of 15 digits. First 2 digits would be of state, next 10 digits would be of your PAN number. Now say if you have an additional place in the same state, then you have to amend your registration of certificate, and then on the 13th character, that one more number would be increased. Suppose if you are having an additional place in an interstate, then state code would be different, but your PAN number would remain the same. So then there won't be any change in the registration number. Next is temporary registration number provided only for sumoto registration. Is temporary registration number provided only for sumoto? Yes, temporary registration number will be provided for the first to the existing SSE for the migration. For sumoto also temporary registration number would be provided. Then next query is in respect by the Sunil Shah. He says wrong HSN code uploaded in the return, that effect on ITC claim, other details are same. See, apparently this HSN code they are requiring for the purposes to determine whether the proper tax has been discharged on this product. That is the reason why HSN code is there. So if you in respect of claiming the input tax credit, though the wrong credit HSN code number has been mentioned, but you have other person has accepted that your transaction, then in my view there is no harm in claiming the credit. Then Mr. Abhishek Doshi, what is the difference between casual supply of services and sale of mobile to my friend in another state? As I have told you, the difference between the casual taxable person and a non-resident taxable person. So in respect of a casual taxable person, if you are selling your mobile phone, the same example which I have provided to you, then if you are a chartered accountant and if you are selling the mobile phone, then that selling of mobile phone was not in the course of or furtherance of business, and accordingly to me it appears then that would not be considered as casual supply and you won't be covered under GST. Okay, let me have a water. Sharma ji, as you said, we are getting messages from the department in Maharashtra regarding that registration of the existing taxpayer. However, can we take a provisional registration by 31st March and there is no consequences? So till 31st March, there is no problem. Yes, sir, as I have told you that you take first of all provisional registration. If you cannot able to upload your document, you did not have to worry, because as per the migration provision, you require a 6 months period of time within which you have to decide whether you wanted to continue or not to continue. If you want to continue, then you have to file the form number 24 and apply for the registration to obtain the final registration. So, sir, that is not required. Why you wanted to upload two documents again? Yeah, yeah. Correct, correct. So to my mind, that is not required. That is not the essence. But we know that administratively what happens. So this is the query. Yeah, I think I have dealt by all the queries. Atul bhai.
Thank you, Ashit bhai. Before coming to vote of thanks to well-deserved vote of thanks to Ashit bhai, there is one announcement. We have organized next webinar on 27th of this December 2016 at 6 p.m. It is by Mr. Bharat Semlani and topic will be input tax credit under GST law. So please register yourself for the seminar. I am repeating that it is on 27th of December 2016 Tuesday at 6 p.m. Coming to what well-deserved vote of thanks, you all will agree that see Asif Shah has explained us how to register, how to get registration, how to pay GST amount, and how to file returns under GST law in lucid manner. He is one of the best speaker we have for the subject allotted. He is kind enough to give us his views on all the queries raised during the webinar. We thank Mr. Ashit Shah for his sparing time, and we also thank you all for connected to us in large numbers from across the country. Please give us your feedback regarding voice and picture quality of PPT at webinar at office@ctconline.org. We wish you happy learning. Good night. Thank you all.